What's up, investors? Justin here. So today we will be talking about Growgeneration Stock. And I want to talk about this stock in particular because I believe it has a potential to 10x in a very short period of time. This is a stock that not a lot of people know about, and none of the big financial YouTubers are even talking about it, which in my opinion means that this could be the perfect opportunity to buy shares before everyone else. Also, we all wish we could go back in time and buy our favorite growth stocks for pennies on the dollar. But we can't. So instead of kicking yourself for missing out on hot stocks that have already 10x'd, it is important to remember that there are always new opportunities to make money in the stock market. So in today's video, I will first give you an overview of Growgeneration Stock, then I will talk about why I am bullish on Growgeneration, and lastly, I will give you my price prediction for this stock over the next year. So if you are a growth investor looking to grow your money quickly, make sure you stick around for the entire video. But first, if you are new here, go ahead and hit that subscribe button. I make videos every week on the stock market and investing, and I do my best to give you the most accurate and unbiased information possible. So if you find this video valuable, hit that subscribe button. Now, there are many reasons why I am bullish on Growgeneration stock, but if I had to boil it down to my top 3 reasons, I would say that Growgeneration is a stock that has a winning combination of strong upward momentum, small market cap, and a very big total addressable market. And in my opinion, out of the 3, a large total addressable market is the most important. Small cap stocks that are taking advantage of big growth trends are the most likely to have massive upside potential. And when it comes to Growgeneration stock, they are taking advantage of the growth in the cannabis market, which is a market segment that is set to explode as more states make marijuana fully legal. Now, to be clear, I am not someone who smokes pot, and I don't do drugs of any kind except for caffeine in my morning coffee. So this video is not about advocating for or against the legality of marijuana, but in my opinion, it does seem a little strange to make alcohol legal and marijuana illegal. Also, the US has more people in prison per capita than any other nation, so finding ways to reduce the number of non-violent offenders in jail is important, which decriminalizing weed could be an easy way to do just that. So overall, I think states will be under increasing amounts of pressure to make marijuana fully legal moving forward. And if we look at the data, we can see that this is already happening. In 2012, Colorado and Washington were the first states to legalize the recreational use of cannabis. And since then, 16 other states have followed their lead. So overall, my bullish investment thesis on Growgeneration stock hinges on the increased legalization of marijuana across the US. But I am not the only one who notices that this trend is happening. And there are many different cannabis companies out there right now who are trying to capitalize on this trend. So with that being said, let's talk about why I think Growgeneration stock is positioned better than many of the other high-flying cannabis stocks out there right now. The truth is that the vast majority of cannabis companies are focused on selling actual cannabis products, which is going to become a very crowded market as more and more growers jump in. But instead of trying to sell cannabis products, Growgeneration is taking a different approach. Instead of growing and selling cannabis products themselves, Growgeneration operates garden centers that help people to grow their own cannabis. And altogether, Growgeneration is the largest hydroponic garden center chain in North America, with 36 garden centers spread out among 11 different states. And what's encouraging about this is that they have ambitious plans to keep growing, with plans to build an additional 14 locations in 4 new states by the end of next year. Now, the genius of this business model is that Growgeneration can take advantage of the growth in the cannabis industry without needing to get involved in the legalities of selling actual cannabis. And if for some reason the legalization of marijuana hits a roadblock in the US, Growgeneration will still be able to operate and sell products. But in a lot of ways, I like to think of Growgeneration stock as a shovel company during a gold rush. Back in the 1850s, gold was discovered in California for the first time, which led many people to pack up everything they had and move there in the hope that they would strike it rich. And even though most people failed, there was one group of people that ended up consistently making a lot of money. And of course, these were the people that were selling supplies. And this is because not every gold miner was going to discover gold, but every gold miner still needed a shovel. And this principle is the same one that Growgeneration hopes to capitalize on in the cannabis industry. As cannabis becomes legalized in more states, more people will be incentivized to grow it. either for themselves or to sell to others, which in turn will lead to a big rise in demand for cannabis growing equipment. And because of this, many analysts are calling Growgeneration the next Home Depot, which if they are right could signal big potential for Growgeneration stock. Home Depot has a market cap of nearly $300 billion, while Growgeneration sports a market cap of under $2 billion. So even if Growgeneration only reaches 1/10 the size of Home Depot, that still represents over a 10x gain from current prices. Also, with the legal cannabis market in California alone estimated to hit $5 billion by 2022, it is safe to say that this is a huge opportunity. Now, when it comes to a stock like Growgeneration, financials play a very important role in analyzing the stock. If Growgeneration was a high-flying tech stock like Tesla, then I think investors would be much more forgiving of subpar financials. But Growgeneration is not a high-flying tech stock. It is instead a retailer with physical locations. Now, they also sell their products online, but they aren't really considered an e-commerce company at this point. But the good news about all of this is that Growgeneration actually has very impressive financials for the business segment they operate in. In their Q3 earnings report, Growgeneration reported revenue of $55 million, which is a 153% increase year over year. And what's even more impressive is that in Q2, they reported $43.5 million in revenue. So in a single quarter, they have been able to grow their revenue by 26%. Which is impressive for any company. And like I said earlier, they have plans to open 14 more stores in 2021. So based on this, we can reasonably expect the revenue to keep growing well into next year. Now, high revenue growth is always a good sign, but we also have to take into consideration gross profit and gross profit margin. So let's take a look at that next. In Q3 of this year, Growgeneration posted a gross profit margin of 26.5%, which is actually lower than their profit margin from Q3 of 2019. But if we look at their gross profit this quarter compared to a year ago, we can see that it more than doubled, from $6.5 million to $14.6 million. So even though their margins took a hit, Growgeneration still more than doubled their actual profit. And a big reason for this is Growgeneration's expansion into the commercial markets and their e-commerce business, which can both negatively affect profit margin. But I will say that 26.5% margins are not bad, and expanding into these lower margin business segments does bring quite a bit of revenue growth. So overall, I think this is a really good move by Growgeneration, and it will ensure that they can keep growing for many years to come. Now, out of curiosity, I looked up Home Depot's gross profit margins so that we could compare them to Growgeneration's. And what I found was very encouraging. Between 2005 and 2020, Home Depot's gross margins have consistently been around 34%. So Growgeneration's 26% margin is not that bad. Also, we have to remember that Home Depot is a mature company that has already made a lot of big investments into areas such as e-commerce. So I am personally confident that Growgeneration's margins will improve as they grow bigger. Also, the other encouraging thing to me is that when we compare Growgeneration's net margin to Home Depot's, we can see that Growgeneration is performing just as well as Home Depot. Home Depot recently reported net margins of roughly 10% on gross margins of 34%, which is roughly a 24% difference. And if we look at Growgeneration, they reported net margins of 2% on gross margins of 26%, which is also a 24% difference. Also, Growgeneration posted positive operating margins and gross margins for the first time in company history in Q1 of 2020. So by all accounts, Growgeneration's financials look really solid, and they are trending in the right direction. Now, the one downside to Growgeneration stock is its high valuation. Growgeneration currently has a price to earnings ratio of 564. So this is not a cheap stock. But with a market cap of only $1.6 billion, there is definitely more room left for this stock to run, in my opinion. Also, with the investments Growgeneration is making into e-commerce, this is a stock that could skyrocket if it gets rebranded as an e-commerce company. And I think the possibility of that happening is fairly high over the next couple of years. So let's move on to price targets. In terms of analysts' opinions on Growgeneration stock, it looks like a lot of analysts agree that the stock may have gotten a little ahead of itself. Zacks.com ranks Growgeneration as a hold and gives the stock a value score of F, which is not very reassuring. But if we look at the analyst recommendations, we can see that all of them rate Growgeneration stock a buy right now. Out of the 5 analysts at tipranks.com, all 5 recommend Growgeneration stock as a buy, and they give it a 12-month price target of $40. So that is a good sign. Also, if we look at CNN Business, we can see that all 8 of the analysts covering Growgeneration currently recommend it as a buy as well. And they also give it a 12-month price target of around $40 a share. So overall, I think this is a very positive sign for Growgeneration stock as we move into 2021. And I personally believe that the momentum can continue for this company. Now, one of the biggest reasons for my optimism is the large number of bullish catalysts that are pushing the stock higher. The first is their stellar Q3 results, which we have already covered. The next is their upbeat guidance. Growgeneration raised their revenue guidance for 2020 from $170 million all the way up to $190 million. Also, Growgeneration has been marked as an essential supplier to the agriculture industry during this time. Therefore, all of its stores have stayed open and will continue to stay open for as long as the pandemic continues. And this will continue to drive strong in-person sales at their physical locations. But on top of strong brick and mortar sales, Growgeneration is also investing heavily into growing their e-commerce platform. Growgeneration has rebranded their e-commerce sites and put them under a single name. So now customers can go to one website instead of multiple. Also, the e-commerce site will be integrated with their stores to allow for delivery or in-store pickup. In addition, Growgeneration is also focusing heavily on expanding their reach among commercial cannabis growers. Right now, Growgeneration services around 1,000 commercial accounts. But Growgeneration has identified over 14,000 licensed hemp and cannabis growers in the United States, and that number will most likely keep growing. So Growgeneration believes there is still a lot of room for growth in this commercial segment moving forward. And last but not least, Growgeneration is laser focused on expanding right now. Growgeneration has acquired 6 different garden and hydroponics suppliers in 2020 alone, which will help them expand to more locations and grow their revenue even faster. So with all of these positive catalysts, I am giving Growgeneration stock a price target of $70 to $100 by the end of 2021, which is very ambitious, but I think it is possible. Now, currently, Growgeneration stock makes up roughly 3% of my personal portfolio, so it's not like I am going all in on this one stock. In fact, I currently have 32 stocks in my personal high-growth stock portfolio, so I am fairly well diversified in my current holdings. But I am continuing to add to my position in Growgeneration stock, and I do believe that this is a relatively safe stock considering its small market cap size. And even if there is a big drop, I would be confident buying more, as I think this is a stock that is capable of growing for many decades to come. So if you enjoyed the video, make sure to hit the subscribe button. And with that, thanks for watching.